All right, let's be honest. You've been there, haven't you? Your finger hovers over the buy button, your pulse is racing, palms are sweaty. You've back tested this setup for weeks. The trend looks textbook, yet that little voice in the back of your head whispers, "What if I'm wrong?" Again. So you freeze, you hesitate, and then, just like clockwork, the candle closes exactly in your favor and the trade rockets off without you. Another winner, another opportunity, watched from the sidelines. If that scene feels painfully familiar, trust me, you are absolutely not alone. In fact, over 72% of retail traders openly admit that the sheer fear of being wrong is what keeps them from pulling the trigger on perfectly valid signals. It's a confidence killer, pure and simple. But what if I told you that today, right now, I'm handing you the exact playbook I used to completely erase that hesitation, to replace that nagging doubt with cold, hard, data backed certainty? Not some fluffy pep talk, no lucky rabbit's foot, just repeatable tools and rules you can plug into your trading routine tonight. We're going to build an unshakable trading confidence brick by data driven brick. This isn't about hoping, it's about knowing. Look, confidence doesn't just evaporate because the market decided to be cruel that day. No, it usually dies a slow, silent death, often at the hands of three sneaky assassins. First up, vague position sizing. If you don't know your exact dollar risk before you even click that button, then every tiny tick against you isn't just a market fluctuation, it feels like a shark bite. It's a gut punch. That uncertainty, that lack of a clear boundary, chips away at your resolve. You're trading blind and your brain knows it. Second, we've got no statistical proof. Hoping a strategy works, that's a prayer, not a plan. It's fundamentally different from seeing a robust database of at least 30 historical trades that unequivocally prove it does. Without that empirical evidence, every trade feels like a gamble, not a calculated probability. You're flying without instruments, just a hunch, and hunches, my friends, don't breed confidence, they breed anxiety. And finally, the third assassin, memory overemphasis. Our human beings are wired to remember the painful stuff. We'll recall that one devastating loser with vivid clarity, often more vividly than the nine perfectly executed winners that preceded it. This cognitive bias inflates the perceived danger, making every potential loss feel catastrophic. It's like our mental highlight reel only plays the bloopers. We inflate the risk, we magnify the potential pain, and suddenly the markets feel like a minefield. The good news, fix this checklist and you'll start to fix the fear. It's about shining a light on these hidden killers and disarming them. Let's be real, a trading journal is utterly useless if it's just a teenage journal filled with "felt sad today" entries. That's not a tool, it's a lament. You need to upgrade it, transform it into a quant dashboard, a personal performance tracker. Stop just writing down buy gold. Instead, track five crucial metrics like a hawk. Your entry signal quality. Was it textbook or a bit fuzzy? Your exit efficiency. Did you stick to your plan or did you panic? Your planned risk. The exact dollar amount you were willing to lose. The actual loss. How much did you lose beyond your stop? And crucially, an emotion tag. Were you calm, bored, euphoric, or terrified? Now, here's where the magic happens. We need to review our journal at the end of each week. Make notes of any common themes that you see. When you were bored in a trade, how did that trade perform? Or if you were fearful in a trade, how did those trades perform? Track all of this and write down the common things that you find. Once you see the data, once you have that proof, Write it down on a sticky note and put it on your screen. That's an instant confidence spike because you're no longer guessing, you're executing a proven data backed process. Your journal isn't just a record, it's your personal data scientist revealing your path of profitability. Here's an ironclad rule for you. You need to pick a total allocation amount per trade that you are genuinely comfortable with going to zero. It should be a dollar figure that doesn't cause you to make emotional decisions and, most importantly, won't blow up your account. For some, that might be 5% of their total account balance. For others, it could be 10% or as low as 1%. The exact number isn't the point. Your psychological comfort is. The key is defining this amount before you enter a trade. Think about it. When you know the absolute worst case scenario is an amount you've already mentally accepted as the cost of doing business, fear has no fuel. It starves. You'll sleep better, you'll think clearer, and you'll click the button with conviction because your financial and psychological well-being aren't on the line with a single outcome. This isn't just about protecting your capital, it's about protecting your psychology so you can execute your trade flawlessly. Elite athletes don't just dream about hoisting the trophy. They rehearse the next pass, the next shot, the next play again and again in their minds. That's the mindset you need. For 60 seconds before the opening bell or before you even consider entering a trade, sit quietly and mentally walk through the entire upcoming trade sequence. Visualize it. Price hits your entry, your stop goes under that key support level, your target looms at yesterday's high, and you're breathing calmly, watching it unfold. Research from the University of Chicago actually shows that this kind of focused visualization can boost performance consistency by a whopping 23% in tasks that demand rapid decisions under uncertainty. And what is trading, if not the ultimate rapid decision-making task under uncertainty? This isn't too woo-woo, it's neuroscience. You're priming your brain, building neural pathways for success. So when the real moment arrives, your actions are fluid, not frantic. You're not just hoping for success, you're rehearsing it, embedding it in your subconscious. This mental rehearsal bridges the gap between theory and execution, making your actual trade feel like a familiar action, not a leap of faith. Roll out of bed, scroll Twitter, chase pumps, sound familiar? That, my friend, is chaos in, chaos out. Your trading day deserves a more disciplined start. Replace that chaotic scramble with a simple 3-step loop, all done in just 15 minutes. First, hydrate. A big glass of water. It's simple, but it increases blood flow to the brain, sharpening your focus and clarity. You wouldn't expect your car to run without fuel, so don't expect your brain to perform without proper hydration. Second, read yesterday's journal notes out loud. Yes, out loud. Let those rules, those lessons, those insights echo in your ears. This reinforces your discipline and reminds you of your recent wins and, more importantly, your recent mistakes. It's an active form of self coaching, reinforcing the neural pathways for good habits and warning against the bad. And finally, the last step for this 15-minute pre-market ritual, set your platform alerts at your key levels. Then step away. Don't just sit there glued to the screen before the market even opens. Don't watch every tick. Set your alerts, know your plan, and then go do something else. Take a walk, relax. Total time for this entire ritual, a quarter of an hour. Discipline, true discipline, starts before the first candle even forms. It's about creating an environment where success is not just possible, but it's probable because you've prepared your mind and your system for it. Confidence absolutely soars when you start seeing your equity curve climbing up. But sizing up your risks too early, driven by ego or a lucky streak, is one of the quickest ways to crush an account and shatter that hard earned confidence. So, how do we do it safely? Number one is time or number of trades. I would not recommend increasing your risk on each trade before at least 30 days or 30 valid trades. Number two would be account value. Has your account increased by 50% without more than a 10% drawdown? That shows that your discipline is in check. And finally, your emotions during losing trades. Read those journals. Are you staying calm, cool, and collected when a trade is in the red? Are you emotionally devastated when you take a loss? If so, it is not time to increase your risk regardless of the value in your account. You know the old saying, jack of all trades, master of none? Well, in trading, it's jack of all setups, master of none, confident in none. Trying to chase every hot strategy, every new indicator, every single market opportunity is a recipe for overwhelm and ultimately underperformance. It dilutes your focus and prevents true mastery. Instead, pick one strategy. Choose a setup that genuinely resonates with your personality and your risk tolerance. Whether it's a breakout strategy, a pullback play, or a mean reversion technique, and then grind it. Trade it for 30 consecutive days. Collect all the data rigorously. Know what your risk to reward is. Know what your win rate is trading the strategy. Tweak it if you need to. Then you stop seeing chaotic charts. You start seeing pure, quantifiable expectancy. You develop an intuitive understanding of its nuances, its strengths, and its weaknesses. This deep, granular understanding of your edge is what builds rock-solid, unshakable confidence. It's about depth, not breadth. So let's wrap this up. Confidence in trading isn't some fleeting mood you wake up with. It's not a magical feeling. It's a direct, undeniable byproduct of evidence. It's built on proof. You collect that evidence with a ruthless, data-driven journal. You protect it with ironclad, non-negotiable risk rules. And you reinforce it day in and day out with disciplined, consistent routines. Do all of that, truly commit to it, and hesitation dies a quiet, merciful death. You'll wake up each morning not obsessed with the outcome of any single trade, but certain of your robust, proven process. So tonight, right now, build that journal, define your personal sleep at night risk amount, and start proving your edge with small, real money trades. The next time a perfect setup flashes on your screen, your hand won't hesitate. It will already be in motion, executing your plan with precision and conviction. No pep talk required. If this video armed you with practical ammo, if it gave you that nudge you needed, then drop a confident "I'm in" the comments below. Subscribe for more no-fluff trading tools, and make sure that you're trading in a community. If you're currently trading alone, I invite you to join myself and my trading partner Trendy John in the Trendy Trading Room at Simpler Trading, where we trade live with a community of traders every single day. I look forward to seeing you in the next video.